Good morning, ladies and gentlemen. Third time is the charm, or is it not? The classic phrase everyone has heard growing up as a kid. And today we're going to be talking about the Russell, the S&P, and the NASDAQ. Basically going over, are we about to get a breakout? The S&P and NASDAQ kind of subdued today, but the Russell or the IWM powering up 1.71%, with the regional banks going up about 1% as well. So a strong showing from the lagging index, as I would basically call it, where the Russell was behind. Now, just to put into perspective, we do have this very large head and shoulders pattern on the Russell that could play out in the future. However, we're very close to invalidating it and basically trading above that 187 mark and closing near it. We really started to challenge these upper levels. Now, I did put in the title of the video third time's charm because we have basically based out here before and got rejected. As you can see, we had 1, 2, 3, 4 candles, got rejected. 1, 2, 3 kind of got rejected. Now we got a strong move to the upside. Do we hold that, or basically do we just go limp like we did last time, coming crashing down, kind of consolidating in this region? Or is this one massive consolidation period that we basically just need to go through before we break out to the upside? So that's the question that we're going to try answering today. So if we look at any of the levels basically that we had, or the weekly levels that we had, we are at the upper range of where we need to break. The upper range for the Russell for this week was basically 188.84 is the breakout range, and basically the breakdown range is 180.72, right to where a lot of support is present. So starting off the week, great show from the Russell, and we just have to see how it all plays out. But with due time, we have to see how it goes. Now, one of the concerns I have is, as we've been pushing up, volume has been decreasing on the Russell, and we really haven't seen a big volume ramp. Is this kind of a fake out before we come back down? Because again, you were going up as volume was stagnating. So we have to see how that all plays out. And then again, we have to see when we break these ranges, do we break to the upside or the downside? And that's going to be the true test. Now, if we go just quickly to the other indexes, just to see kind of what they've been telling us, you can clearly see the S&P is just kind of going sideways. We did have a gap down today, but we basically filled the gap, closed to the high. And the NASDAQ had a similar story, basically closing flat on the day. It actually made a new lowered low, so that's pretty important that tech is showing more weakness than the S&P or KRE, let's say, or the Russell in general. You're seeing maybe a rotation versus a crash leg that a lot of people are talking about. I still think we get that, but later down in the year, possibly into the next year, we have to see. Right now, there is no evidence of that coming to fruition, or none that anyone can show. I know there's a lot of things that we talk about on the channel, like the yield curve and everything, but on the charts, there isn't something yet. Now, again, that could turn in a dime, a day or two, and you could create that signal. So we have to see. Now, what could propel the Russell upwards or downwards? And it's pretty simple, is Apple. Apple today actually broke the trend line that we've been talking about since we're blue in the face. We gapped down, failed to fill the gap, and we just basically held it. We make a pretty nasty cut on Apple, about 2%, coming down to lows. Retraced basically the bulls coming in to buy the dip. They didn't manage to buy the dip all the way, but this is concerning when Apple and Microsoft are basically down this much, but the index itself is not. That shows broader participation in the market and the possibility of rotation, where if you saw the Russell down with S&P and NASDAQ and Apple and Microsoft doing this, then okay, I would say rotation to the downside. He did have decent volume in Apple and Microsoft today, and Google especially. A lot of big tech leaders did break these levels. Google, this is where it gets interesting, just because we're starting to come back down to this gap fill right here. So that gap fill is going to be pretty important, where if we start breaking the support level that we're at now, where Google closed, then we definitely could see more carnage in the market. Do we see the bigger names start bleeding into CPI? The CPI trigger a sell-off in the market? Because you had names like Nvidia, Amazon, Google, Microsoft, Apple, all red today. Amazon, if we go to it real quick, kind of stalling out in this upper area. So are we basically seeing a rotation, or are we seeing a start of more carnage ahead? And for the S&P, it's going to be pretty simple to answer that question. And that's going to be, do we have a rotation to the downside once we break the level from the previous week, which basically is R3, which is our 437.06, or do we break the upper area of consolidation and break above 444.08? That's going to be the two levels I'm going to be watching out for. Right now, we're closer to the support level or basically the rotation to the downside. So you basically, if we look at potential 0.5% up to 1% to the upside versus 0.5% down. So again, that is pretty nice odds. I would be definitely playing the upside because of the 2-to-1 risk to reward. You break to the downside, you just lose 0.5% versus you can gain a whole percent, especially this being relatively low price action in this area that we're heading into. Could definitely see it going that way. So we have to keep an eye on that. I would basically say if we start making higher highs from today's highs, then I'd be looking to continue the bullishness. If I see the big names like Apple and Microsoft selling off, then I would be interested to see if they catch a dip, because again, today they did catch a dip. Apple caught a pretty massive dip. It was down roughly from the close yesterday. We're looking down 1.8%, closed down 1%. So they bought up almost a 0.8% dip on Apple. But again, the bigger names like Google and Amazon basically pulled the broader market or held the broader market back, while you had an interesting rotation into financials like JP Morgan, Bank of America. All the banks were pretty much green today. You had some of the other sectors like home builders and XLI, which is the industrials, were basically seeing a rotation. You're seeing industrials. Chips had a pretty good day where you had Intel and NVIDIA kind of leading the way. NVIDIA was down a little bit, but AMD mainly led. But really, it was AVGO that gave you that big push, powering up to trying to tackle this $900 price area, and definitely could see a bigger A to B pattern playing out here, where on AVGO, if we look at A to B, B to C leg, that rotates up into basically the thousand mark. So that'll be a pretty historical number for AVGO or Broadcom. You guys know our opinion about Broadcom on the channel. It's pretty one of Fatal's favorite stocks. He talks about all the dang time. But before I go off on a tangent, looking at the S&P and the NASDAQ, they're primed for a rip up. They came down relatively with the big names basically kind of just stalling out, pulling the market down, while you saw rotations into the bigger names. So if you get more people buying the dip or a bullish run in the big names versus the smaller names staying stable, you definitely could see a larger push into extreme greed. And speaking of extreme greed, let's take a look at the fear and greed. So taking a look at the fear and greed index, guys, we basically closed exactly where we opened at 78. We really didn't see a push pull in this. We kind of just stayed flat all day. And you have extreme greed on the movement of the index, extreme greed on the stock breadth, which is really good. That's something we actually wanted to see if we're going to get bullish on this market, is greater market participation from everywhere else. Put to call ratio is still in that low area, with safe haven demand and basically junk bond demand being in greed. So people are kind of a little bit rotating into those yields. So what does that mean for the indexes? Well, if you look at the yield curve, which we talk about on this channel a lot, we can clearly see that it's basically catching a dip in this area, and it could start rotating up. So again, that could be more pain ahead, especially if the Fed decides to raise interest rates. I do think that's going to be heavily dependent on the CPI number. And if we just jump over to this week's news, we can clearly see they're expecting a 5% CPI reading on the year-over-year number, basically a 0.3 decrease from the previous months, and basically the that was for core. For headline, seeing a 0.9 decrease back to 3.1%. But then again, guys, the Fed does not care about this. They care about core PCE, which is very stagnant. Now, they could use this as an out to basically not raise rates, but they could also say that we're going to raise rates and then see how it goes, maybe not raise them again. And I think the market will take that as a pretty euphoric gesture. I think that everyone's going to perceive that as the Fed basically pausing. But again, I do think until PCE, keyword PCE or core PCE, shows weakness, I do not suspect the Fed to relent on their path to raising interest rates, because it has just been a stagnant plateau rather than core CPI, which was compared to now the readings back in June and July, which was the highest in recent history. Of course, you're going to get a decent year-over-year number. The month-over-month is where it gets more curious, where you're seeing increase in the month-over-month, and the core kind of just floating around the 0.4, 0.3 region. So you still see a positive number month-over-month, meaning inflation is still there. You're not really seeing subsiding. You're just seeing the year-over-year number be calculated different because it's weighted against something different. But now once you get into the lull of November, December of the previous year where we saw inflation coming down, do you see a resurgence in that and then you get a more hawkish Fed because of it? I don't know. So throw it down in the comment section below of what you guys think. I always like to hear what you guys have to think about on the channel. But then again, just a quick recap. We're going to have to be looking at the S&P to see if we get that rotation, that downside or upside. The Russell, I'm going to have my eyes glued to it just to make sure that doesn't break above 188.84, because that's going to be a pretty massive run on the Russell. And the Russell has potential to run pretty hard, so definitely be in an interesting short-term option play if you're looking for that, especially with a lot of this consolidation is a lot of pent-up momentum, and we could see an interesting rotation up or down. Be careful for fake outs just because we would need to close above these levels, guys. You can participate in it, but if we don't close above it, and once we break through it, then it's pretty much failing to hold, and we could see the rotation to the downside. And then the same way, if we break to the downside and fail to hold it and rotate to the upside, we've seen that time and time again on the market. And I'd be looking for NASDAQ to catch a bounce. It's been basically going sideways right now, and it's time to go to boomtown, baby, like they say, and rotate to that upside and participate with the broader market, break above 372 and start tackling towards that 375 price point. That should be its next logical target. And with that, guys, I will conclude today's video. Thank you so much for watching. If you do not mind, throw a like on the video. It really helps the YouTube algorithm, and possibly consider subscribing to the channel. We do weekend deep dives along with viewer requested ticker Fridays, where we go over your requested tickers on Friday. So throw it down in the comment section below of what you think and what you want us to cover. So thank you very much, and hope you have a wonderful rest of your day.